Yeah, let's stick more broadly with the theme of Indian stocks, which have been hitting all-time highs. Options traders looking positioned for stability or even further gains as the second COVID wave is showing signs of abating. The Reserve Bank of India has already warned against a bubble forming in a market that looks disconnected from the wider economy and the pandemic-induced slump of 2020. Joining us to discuss all of this for an exclusive interview from Mumbai is Radhika Gupta, MD and CEO of Edelweiss AMC, one of the fastest-growing mutual funds in India, which manages $7.5 billion in assets. So how constructive are you here, Radhika, on equity markets, given, thankfully, we are seeing this second COVID wave start to dissipate?
I think our medium-term view remains constructive on Indian equities. As you said, the second wave has abated and the trajectory of vaccinations has also gained some speed. So our view is that at least economic activity has bottomed out in Q1 FY21, and it's only going to move upward from here. I think two important points further. I think the central bank has been very clear in its commentary that it is going to do whatever it takes to continue inducing growth. And the second is that corporate earnings through this period have been handling the crisis situation particularly well. If you look at earnings across the board, I think there has been very healthy profit growth. Some of it has been driven by market share gains and margin expansion, but net earnings growth has been very healthy. So the medium-term trend does appear sustainable. That doesn't mean that there can't be short-term risks, but I think the market share growth, the debt reduction, that we're seeing from companies at least is a healthy sign.
So you're saying it's going to take probably at least a year for the economy to recover from the scars of the pandemic. What does normalisation in terms of the RBI's policy look like then?
I think one is, yes, I agree, it will take time to recover from the pandemic, particularly the unorganized sector. I think the stance that the RBI has taken that, we're going to prioritize growth and sustained growth. I think the key word here is sustained versus short-term inflation, and inflation might be supply side in our case, is probably the right one. I think one element of normalization that's important is the yield curve. Indian yield curves have gotten fairly steep, and the long-end rates need to come down. I think that is something RBI has been talking about, and that is going to help long-term borrowing costs because a lot of Indian companies are ultimately long-term borrowers. So long-term financing has to become easier.
Radhika, this terrible second wave that India has endured has, of course, caused inequalities to perhaps widen. We've also seen a shrinkage of the middle class. And let's not also forget the sort of collective psychological damage done. Has the Indian economy in any way structurally changed, and how do you adapt to it if it has?
I think the one change, and I don't think it is a COVID-induced change, but perhaps COVID has accelerated a change that was already happening post-2017, demonetization, GST, a lot of reforms that have happened, is a shift from the unorganized sector to the organized sector. That is visible even in corporate earnings, as you talk about. So the organized sector is gaining pricing power. Larger players are getting larger. You see market share gains across the board in the organized sector. So I think that is a trend that has been accelerated by COVID, not necessarily started by COVID.
So what ultimately then, is the cause, if you will, of these Indian equity markets hitting these record highs as they did on Tuesday? And the thing is, are they at the moment looking at a post-COVID future and pricing that in which case, what's next?
I think so. I think the world is, it has been a trade-off between virus and vaccine. And while April and May were very, very tough for India, just as all the virus news was hitting the news, I think vaccine pickup has been important. And I think people are taking a bet that the economy has bottomed out. We did not have a national lockdown, even through the months of April and May. So economic activity was still going on. And with this situation significantly normalizing in June, I mean, COVID cases are below 10 lakhs in India now in the month of June, there is a bet that Q1 is probably the worst. And in certain sectors, and that's certainly how our portfolios are going to be looked to positioned, now, a growth push will be important and will start pushing some of the cyclical sectors. So a revival in economic demand will start pushing some of these sectors.
So a growth push and then in inflationary pressures too. How's that affecting your bond strategy?
So our bond strategy has been a little bit of a barbell approach. On the short end of the curve, we're telling people to be closer to cash and not take, 1 to 2 year duration, because you can have a scenario where interest rates rise. On the longer end of the curve, we do continue to see opportunities. By longer end, I mean 5 to 10 year end. As I said, the yield curve is steep, even in the highest grade of corporate bonds. So high quality corporate bonds on the long end. So it's a barbell strategy, either very short end or very long end.
So, Radhika, this brings me just on a final point here and ask you, what are you most optimistic about and what are you most pessimistic about?
So I think, I'll focus on three sort of opportunities that we are optimistic about in the portfolios. One is the upturn in the cement cycle. Cement demand is expected to, improve, and with a focus on infrastructure, revival in the real estate sector, which is going to be a theme. I think cement is one theme. The second is as a result of China plus one. A lot of corporates have been talking post-virus for China plus one strategy. So electronic equipment is a second space that we continue to be bullish on in our portfolios. And then a theme that we've been talking about for the last 2 years in our mid-cap fund especially has been industrials and infrastructure. Capital investment has typically been government-led in India, but we think private capex will pick up. So we own a lot of capital goods and engineering businesses. So these are the 2-3 themes that we are more bullish on. Traditional FMCG consumption is the one that we're a little more bearish on.
Thank you, Radhika, for joining us. Radhika Gupta, the Edelweiss AMC Chief Executive and Managing Director. Getting to the Indian markets, we've had just